While WTI also pushing high, and that's the US benchmark, of course, hovering just below $100 as we speak. Joining me now to discuss this live from Singapore is Vandana Hari. She's the CEO and founder of Vanda Insights, as well as the former Asia Oil News Director at Platts Singapore. It's good to have you. I just want to get your response first and foremost to those oil prices. I mean, what does Iran formalizing control of the Strait through fees and coordination, for example, mean for markets and oil prices? That's one story that we need to discuss at this point.
Hi, Becky. So as long as the Strait of Hormuz remains shut, prices have only one way to go, which is up. Today, what we are seeing is a reflection of the market, albeit gradually starting to price in the prospect of the Strait of Hormuz remaining closed for several weeks. The market, at least as far as Brent and WTI futures are concerned, have been a little slow in waking up to the possibility of a prolonged loss of, if not 20 million barrels per day, at least 13, 14 million barrels per day, because that's what we reckon is still shut in, as some of the countries in the region are managing to get some barrels out, but it's a trickle. This kind of outage and a prolonged outage only means supply shock, and that means only one thing for oil prices: they have to continue going up.
Reuters reporting the Saudi Aramco's CEO has pulled out of CERAWeek, which is a major energy conference held at this time of the year in Houston, and others skipping in person. What does that signal about how seriously Gulf energy leaders are treating this conflict?
Yeah, Becky, it's an impossibly challenging time for the oil companies, most of them national oil companies. There are a few overseas players, especially in countries like Iraq. For the vast majority, when we look at Saudi Arabia, Kuwait, UAE, Oman, these are all national oil companies. And look, I wouldn't want to be in the shoes of anybody having to make very, very difficult decisions at these companies. Obviously, overarching concern right now is securing their facilities. Since the start of the war, we have seen relentless attacks, missile attacks, drone attacks, a lot of the damage caused by interception of these, but nonetheless, fires and basically the safety of operations being threatened, and stop operations at some major plants, and some like Qatar, Ras Laffan LNG have had to just completely shut down. So there's just, I can't imagine what
even
can
if the
keep
war
you
ended,
safe.
let me ask you this, even if the war ended tomorrow, how long would it take to get the supplies that the market needs moving again, were the Strait of Hormuz to open up in some way? I mean, this isn't just about what we expect in the next 48 hours, is it? There is a long tail to this, whether or not this conflict continues.
Absolutely, Becky. With the caveat that there is an assured peace. You can't have a sort of ceasefire that, or an end to the war proclaimed by just one side, but not the other side, which still keeps charterers and ship owners just risk averse to going into the Persian Gulf. So I'm presuming you mean, what if there is actual peace, the war has ended? I think the first and foremost, of course, we will see a relief in crude supply, condensate supply. So once refineries, especially in Asia, that have been starved of all the crude that they need, once they get that, then that starts percolating into some relief on the refined products front. But then you have to think way down that chain all the way into petrochemicals products. So by how long it will take for that relief to go all the way down, I would say at least months, because that is the complexity and the long tail of that chain that starts with crude oil and ends in all sorts of plastics and chemicals that we consume every day.
Busy times for you. You'll be keeping a keen eye on what happens next in the hours to come. Vandana Harry, for the time being, thank you. And I do just want to note how the Asian markets have